Well, as we continue our coverage of the markets here, I'm Marlon Bowling, your tour guide to the ag trade, and I want to welcome to the show Brian Hoops of Midwest Market Solutions. He is based in Springfield, Missouri, and let's take a look at the corn market right now, Brian, and we'll see what our prices are doing with quotes provided by bar chart. So on the big board in Chicago, a little bit of a firmer tone now. We're 2 3/4 cents higher at 391 3/4. The nearby December contract is leading the way to the upside. Also, overnight, USDA did have an overnight export sale announcement, and it was for corn, but it was 110,000 tons of corn sold to Mexico, and there was nothing mentioned for soybeans and nothing mentioned of China. So I don't know if that was much of a disappointment to the trade. Let's take a look at the soybean market right now. So on the soybeans, we're basically trading about 6.5 cents higher on the nearby November contract at 10.40 1/4 per bushel. We had been as high as 10.45 1/2 and as low as 10.32 1/2. So a fairly wide range, about 13 cents wide there. And we're just kind of hovering around in the upper half of that range at the present time. What do you think is going on here with this corn and soybean trade today?
Yeah, good morning, Marlon. We're seeing a real technical-based trade today. Had a big sell-off in corn and soybeans yesterday, 31 cents down in soybeans, and that market's trying to see a little bit of a recovery. Really not that much fundamental news other than the inspections that have just come out. They were very strong for soybeans again. The second week that we've seen inspections to be over 2 million metric tons. And a lot of these soybeans are moving off to China. And so it's great to see that not only are they buying, but that we're actually shipping these soybeans to China. And that's really key, is that they are taking the beans and not just putting them on the books. So, market's getting some, I think, support off of that. But certainly, if we could find additional export business in the next several days, soybeans, I think, want to retrace some of what they lost yesterday, as we just don't see any technical signals that would inspire the funds to start abandoning these long positions that they've built. This is the biggest long position the funds have had since going back to the 2012 marketing year for the soybeans, and they're at some really lofty levels, but really no sign for them to start getting out of those positions.
Yeah, they are long on soybeans, about 238,000 contracts. That's a phenomenal number. On the corn, they have flipped to a net long position there too. Now remember, just a couple of months ago, they were heavily net short, and they did turn that around. So right now, it looks like we're long about 134,000 contracts on corn on the commodity funds. Do you consider that a little burdensome or not on corn?
Well, it is. It's the biggest long that they've had since last summer, when we had that rally going into June and July. So it is a little bit burdensome. It just, at this point in time, we're seeing a lot of farmers selling. The farmers have been big sellers here recently because of the price levels that we're at. We want to be selling soybeans right off the combines here. We want to be selling corn as well. This is what the market's telling you to do. There's not that incentive to store. In fact, we're seeing piles of soybeans all around the Midwest. I haven't seen that for a really long time, where soybeans are stored outside on the ground. But until we see better evidence that this market is showing signs of turning over, the funds here, I think, are going to keep adding to these long positions.
Let's look at soybean meal, and you're right. I have been hearing stories of elevators getting backed up with soybeans during harvest here. Soybean meal right now showing December $2.40 higher, and now $2.50 higher, and $356.80 per ton. On the soybean oil market today, we have the December now 26 points higher at $33.42 per hundredweight. Let's take a look at the wheat market, and in Chicago in December, we're 3 cents higher now at 5.97 1/4. We've been on both sides of that $6 benchmark here this morning. Kansas City wheat on December is currently 2 3/4 cents higher at 5.33 1/4 per bushel. And in Minneapolis, you have that December contract 2 1/4 higher at 5.45 per bushel. That's 3 cents from our low of the day as it stands right now. December cotton 25 points higher at 68.62 cents per pound, well off its earlier high. We'll be back and talk more with Brian about our livestock trade right after this. In our effort to find the commodities that are really moving quite a bit, let's take a look at our precious metals this morning. That is a commodity, and on the gold market. Wow, we look at November contract on gold, down $34.20 at $18.90.10 per ounce. It's a $34 and then some change drop in just one day. I wonder if silver is having a similar day. Well, it is. November currently down $1.13 at 24.12 as it stands right now per ounce. Big moves in precious metals here today. As we switch over to our livestock trade, we have the December live cattle down 47 cents now at 110.35. It had been higher. So what happened there? Let's go to Brian Hoops and find out what's the deal with the cattle here.
Yeah, the cattle market, I think, is a real disappointment to a lot of the traders. We saw some 109 trade in the Southern Plains, kind of some cleanup trade yesterday. That's steady with last week. Box beef was higher at midday, and show list numbers are all smaller this week. So the fundamental traders believe we should be moving higher, but the futures did break their down uptrend line yesterday, starting kind of a downtrend, and they're not reversing course today. They tried, rallied right back up to that trend line and pulled back. So from a technical standpoint, we may start to see some liquidation in this market here. This is a little negative chart action, and we're hovering near yesterday's lows. I think we just did take them out. And that's going to be kind of key. A lower close below those lows, I think, will usher in some commodity funds selling despite what the cash markets are trying to do.
Yeah, it is a little concerning if you would have a turn to the downside. And let's review the feeder cattle market with these quotes provided by Bar Chart. Well, November feeders now down 62 cents. We're at 134.92 per hundredweight after a high this morning of 136.77. So we're getting in the neighborhood of a $2 drop off of that early high today, and now we're within a dime of our low of the session. So keep that in mind. The January contract on out is over $1 lower right now. And then switching over to our lean hog trade, here we go. We'll take a look. Let's go to the December contract, and it's currently down $1.20 at 65.42 per hundredweight. And you have that February contract down 72 cents at 69.50. December currently the leader on the way down, and that is where most of the volume is right now, I do believe. Brian, thank you for the time. Always good to visit with you, sir. Appreciate it, and we'll talk with you soon. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Tammy, back to you.